Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Shreve here with a breakdown of the action in today's session, where we did see a snap of that losing streak. Ken, what are your thoughts?
Well, modest gains. We've seen super light volume in the market in recent days. But like you said, we did snap a three-session losing streak. And when we're looking at this entire market of stocks, still seeing a lot of good action out there.
That we are, and a couple of tickers on the radar for today. Solar stocks looking hot, so we'll take a look at Invesco Solar, also GTLS, Chart Industries, and JoJo's really excited about this one, DoubleVerify, ticker DV. But first, let's take a look at the major indexes up across the board. Small caps leading the day with the Russell 2000 up 1%, followed by the NASDAQ up 0.4% by the close. The S&P 500 up 0.3%, and the Dow up 0.2% today, Ken.
Yeah, so you can see we're talking about this dry up in volume in the market, and just looking at this Nasdaq chart, you can see the three declines, the three straight declines that we recently saw came in lighter and lighter and lighter volume, and then even today we had a little bit of rally and a close. Pretty near highs, but volume dried up again. So the real challenge for the Nasdaq right now is to, first of all, get back above that that 21-day exponential moving average, and then it'll have its 10-day line, and then the 13,000 level. So the market isn't out of the woods yet, but ahead of this Jackson Hole Economic Symposium on Friday, where we're going to get a pretty important speech from Fed Chairman Jerome Powell, market seems to be betting on a soft landing for the economy, and it's really all about what Powell says on Friday, and if the market is going to interpret it as hawkish or dovish, or maybe a combination of the two.
Yeah, the market definitely waiting for that. And also on the positive side, we have not gone below that early June high, Ken, right around 12,320. So seeing a bit of a stop here for now with this pullback. But like you said, that could change later this week.
Yeah, well, I thought it was a good point that Justin raised on IBD Live this morning, just talking about that recent high of 12,320, and yeah, you've got the line right there. So it came down and firmed up where we expected it to, but we're like I said, we're not out of the woods yet. I think the one thing the market has going for it is that we're seeing very little in the way of sell signals from leading stocks, and still seeing a lot of stocks out there that are acting just fine.
Exactly. Yeah. Aggressive buy signals, one would argue, with reversals at 10-day moving averages for strong stocks, the 21-day line bounces. So some of that we will get to here shortly. But first, let's take a look at the S&P 500 as well here. So trying to get back above its 21-day line, did come down below its highs from early June, but right around that 21-day line, along with the NASDAQ. Let's also take a look at the Dow hanging right around its 21-day line as well. And the Russell 2000, similar story here, but outpacing the broad market today with a little bit of a stronger day in the market today, Ken, for small caps.
Yeah, small caps had a good day, and it was another day of outperformance for oil and gas stocks, which have been moving higher. That was the top performing S&P 500 sector today, the XLE, and there's word that OPEC Plus might decide to cut output at their meeting in early September, I believe it is, and that's giving a bid to oil and gas stocks and the price of oil in general.
And let's also take a look at the 10-year Treasury yield. We can pull that up with 0TNX in MarketSmith here. So after a pop to that 3% level, continuing higher here today. So what are your thoughts on what we're seeing? I mean, the rally from late May through July really coincided with a decline in the 10-year yield. Now we're seeing that flip a little bit as we've been pulling back. So there's definitely an inverse relationship here. But, can we see a meaningful rally if we do see the 10-year yield continue to climb back up?
Yeah, that's going to be tough. We have four straight up days for that 10-year yield, as you can see on the chart here. Probably maybe starting to look a little extended. Might be ready to pull back down to that 3% level, which has been kind of a floor for the 10-year yield. But we'll likely see more movement in bond yields between now and the end of the week. But the 10-year yield right now looks like it's probably, like I said, ready to pause a little bit. But Nasdaq has shown in the past that it's not a fan of big, fast rises in interest rates. So Nasdaq performed pretty well today, even though we saw another move higher in that 10-year yield.
Yeah, definitely. And also on the rise today, solar stocks. So the Invesco Solar ETF here, which tracks the group, up about 2.2% for the day, bouncing off of its 21-day line like a number of leading stocks in the group did today.
Yeah, well, it's interesting with Invesco Solar. Really want to pay attention to Enphase and First Solar, which are the two top-weighted stocks in this ETF. And I just really like the way Enphase is trading here. And First Solar comes down to its 10-day moving average. Enphase down to the 21-day line. Two support levels here. So both of these stocks are acting great. So it's not surprising to see TAN holding up well. This is a current holding in our leaderboard model portfolio. And for those looking to get in, again, this is a stock that it made a nice breakout over this 77 level, and then just a pullback to the 21-day line here, and volume picked up nicely from what we saw yesterday. So for people maybe wanting a little nibble in the solar space, this doesn't look crazy extended to me. It looks like a normal pullback after a breakout, and good support at the 21-day line.
Yeah, and Array, ARRY, this is another one in the group that we were looking at today, Ken.
Exactly, and I think this was another buy signal for ARRY. Leadership has been pretty broad based in this group. The two institutional quality names would definitely be ENPH and FSLR.
Exactly. All right, well, let's take a look at GTLS because, as you said, oil and gas stocks definitely in the spotlight right now, and GTLS among them, 2 days of gains, so tacking on another 1.4% on to its performance here today, Ken, after a bounce off of the 21-day line in Tuesday's session.
Yeah, big annual earnings estimates for Chart Industries. You can see 76% growth this year, and then I think that's 62% in 2023. So this stock is still trying to break out of a very long consolidation, but it was a pretty tame, orderly pullback down. Just a nice looking weekly chart here. Just a pretty modest pullback. Still trying to take flight here and break out of this consolidation. But back to the daily chart, again, just a pullback to the 21-day moving average. Yesterday, I like the fact that on Friday and Monday, you see when the stock tried to close lower, it closed up near its high both days, and ultimately found support at the 21-day line. So this one looks actionable as well.
And let's also check in on DoubleVerify DV. A little bit of a different looking chart, but in addition to stocks that are showing some nice outperformance for a lot of the year, like we have seen in oil and gas stocks, solar. Maybe it's been a little while since they've at least popped up on our radar, but now the number one group. We also want to be looking at turnaround stocks, so enterprise software, DoubleVerify in that group, and a pretty orderly pullback after getting above its 200-day line in some heavy volume.
Yeah, definitely, like you said, a different looking chart, but different looking charts can also show pretty strong technical action. So this is a stock that's trying to come off lows and doing a pretty good job. It was an earnings report that ultimately fueled a move back above the 200-day moving average, and then volume has quieted down during the recent decline. So really, just keeping an eye on this 27.97 level. I don't think the stock is a buy right now, but that is definitely maybe an alert you can set right at that 27.75, 28, and I would say if DoubleVerify can get back get above that 27.97 pivot, I think would make the stock actionable. But I like the heavy volume gain through the 200-day moving average, and this pullback has been in pretty quiet volume.
Yeah.
So this one could be could be prepping for more strength.
And just to put things to a little bit more perspective, we'll take a look at the weekly chart here. Something that stands out to me, Ken, is not only did we see some strong volume in recent weeks around that earnings report, but the other volume spikes on this weekly chart coincide with blue weeks, so up weeks here, and so some nice upside reversals. So institutional support coming into this stock during this institutional due diligence phase.
Yeah, this is a great way to use weekly charts, and you highlighted those two weeks where the stock was down sharply for the week, but ended up being a blue up week and close right near highs. So these are two good support weeks, and it really does strengthen the chart, even though DoubleVerify is still more than 30% off its high. The fact that it's been able to hold above the 40-week moving average here on the weekly chart, it is acting well technically, and yeah, this is an interesting company. Kind of reminds me of Trade Desk a little bit, TDD, DoubleVerify. In fact, they're in a partnership of some magnitude with Trade Desk, but they operate a software platform for digital media analytics. So kind of similar to Trade Desk, but kind of an interesting business, and like those big annual earnings estimates, and good solid revenue growth in recent quarters.
Totally agree. All right, we will keep it on the radar. Thank you, Ken, and thanks to everyone for tuning in. We will be back with more tomorrow morning on IBD Live, so please join us, investors.com/IBD Live, for all the details there. I'm off tomorrow, but we do have you covered for Stock Market Today with Ken and Ed, so the team will see you right back here tomorrow after the close.